These are examples from chapter 6. This is talking about variable costing and absorption costing. So problem 6 exercise 6-8, variable costing unit, product cost, and an income statement and a break-even. So Chuck Wagon Grills Incorporated makes a single product, a handmade specialty barbecue grill that sells for $210. Data for last year is listed below. The requirements of the problem are: assume that the company uses variable costing. Compute the unit product cost for one barbecue grill. Assume that the company uses variable costing. Prepare a contribution format income statement for the year. 3. What is the company's break-even point in terms of number of barbecue grills sold? Alright, so here's the information given from last year. The very first thing that we want to do is determine the product cost. Variable costing product cost. And let's just do this. Part 1. Okay. So, in variable cost, we are going to include direct materials, and that's $50. And we are going to include direct labor, and that is $80. We are going to include variable manufacturing overhead, and that is $20. And for the variable costing, this differs from absorption costing in the fact that we are going to include the variable manufacturing overhead. So this is our variable product cost. So we're going to total these. And our variable product cost, unit cost, is $150. So this includes all the variable expenses directly related to the product. The next thing we're going to do is make a contribution margin income statement. This is similar to the ones that we've made in the other chapters. So, variable cost contribution margin income statement. Okay, so now we need sales, and sales will equal 210 is our selling price. It was given in the problem, and we sold 19,000 units. Then we must list out our variable expenses, and variable is variable cost of goods sold, and this is equal to units sold times variable product cost, what we just figured out in part 1. Okay. So we sold 19,000 units equals the number of units we sold times our variable product cost. We also have variable selling and admin costs, and that was given in the problem. That's $10 per unit times the 19,000 units. Right. So our contribution margin is our sales minus our total variable expenses. Then we have fixed expenses. And the fixed is fixed manufacturing overhead. And that was given up top as 700,000. That's part of the problem. And then we have fixed selling and admin. In the past, we've broken out selling and admin, and then the actual cost of the product. Here, we're including fixed overhead as part of the fixed expenses because this is a variable cost contribution statement. So our fixed selling and admin, we're going to total these. This is our total fixed cost. And then it should be net operating income. Fixed cost. Equals. We have a negative number here. So part 3 is to actually figure out our break-even point. This is from the previous chapter. Break-even point in units. We can do this by taking the selling price, which is 210, right? And then the variable cost per unit, which is 160 up here, okay? And our contribution margin per unit equals our selling price minus our variable cost. So each unit contributes $50. Now, the formula for this is unit sales to break even equals fixed expenses divided by unit contribution margin. So our fixed expenses are totaled up here, $985, divided by our contribution margin per unit. These aren't dollars, these are units. So we must sell 19,700 units to break even. Now the next exercise we're going to cover is 6-9. This is using the same data as 6-8 from Chuck Wagon Grill, but now we're going to do the absorption costing. And so we're going to see the difference between the two. So again, the units produced, the inventory being sold, this is all given in the problem. The variable cost, this is all the same as exercise 6-8, but now we're going to do absorption costing. So requirements: compute the unit product cost for one barbecue grill assuming absorption costing, and prepare an income statement. Alright, so part 1, absorb costing unit product cost. Okay, so now we're going to calculate the absorption costing unit product cost. So in absorption costing, we include direct materials equals $50. We include the direct labor equals $80. We include the variable manufacturing overhead, which is $20. We don't include the variable selling expenses, but we do include the fixed manufacturing overhead. And the way we find a unit cost, we take the 700,000 fixed manufacturing overhead divided by the 20,000 units. So equals 700,000 divided by the 20,000 units produced. Alright, so this is $35 per unit, the fixed. So now our absorption product absorption costing, unit product cost equals the total of all of these. So that's 185 per product. Now, part 2, create an income statement. Alright. So we have sales equals, we sold 19,000 units, although we produced 20,000. We have 1,000 remaining in inventory. Oops, I added an extra zero there. 210 is our selling price. So we have sales, then we have cost of goods sold. And our cost of goods sold is our absorption cost per product times the actual number that we sold. Okay, so then we get our contribution margin. Okay. And then we have selling and admin expenses. And this is equal to variable selling and admin times units sold plus fixed selling and admin. Okay. So we have our variable selling and admin is $10 per unit. We sold 19,000 units. Plus we have fixed selling and admin costs of 475,000. Net off. Oops. Okay. So now we must get to our net operating income. And it's 0, right? Okay. Format this so that we understand it's right. Format. Alright. So, this is the difference between the absorption costing, we had 0 when we made this, and the variable costing, we had minus 35,000. And that is because the variable includes fixed manufacturing overhead for products that are sitting in inventory. The absorption costing puts it in inventory. So, that's why there is a difference.